This week, we're talking cattle on feed data. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Kentucky's Kenny Burdine. Kenny, it is great to see you.
It's good to see you too, Megan. I know we got a lot to talk about, but you got to give me 30 seconds to congratulate you on being named 2025 Farm Broadcaster of the Year. That's big. Congratulations. Well deserved.
Thank you. We are talking a little bit later this week. I've been in Kansas City all week for the National Association of Farm Broadcasting annual meeting. I appreciate that. I will tell you what I told everybody else who I work with. I get to be hopefully good at my job because you guys all make me better, and I get to learn from all of you guys. So thank you for doing and taking part in what we do every week. It's awesome, and I appreciate you guys so much.
Well, happy for you. Well deserved.
Thank you. All right. So there's a lot to get into this week because we've got cattle on feed. We've got some slaughter data, and we have a plant closure to talk about too. But first, let's recap what happened this week in the markets.
Yep, let's start there. 5 market fed steer price was down $8.30, $216.70. I think that's the biggest week over week drop in the last 6 or 7. If not, it's number 2. There was one that was pretty close. Eyeballing it. December live cattle futures were down almost $5 on the week, closed yesterday at $214.25. Choice box beef price was reported at $371.27. That's down $3.97 per hundredweight on the week. January feeder cattle futures down $6.25 from last Friday, closing at $314.30 on the week. National base hog carcass price down a little over $2, $83.50 per hundredweight this week. Pork cutout was $4.44 lower, $92.80 on the week. And then December lean hog futures down 85 cents, closing Friday at 77.65 per hundredweight.
I want to talk hog, the decline in hog prices first. Are we just kind of in that seasonal space with movement? It seems like we're pretty consistently moving lower lately, and it's been difficult. I think also not knowing what's been going on with export data, and we did get some trade export data this week that showed pork's down, I think about 1% year to date. It's kind of just all coming into play at the same time?
The short answer, I think, is yes. Our hog markets are obviously very seasonal. The drop from summer, to the end of the year is usually pretty sharp in hog markets. We're down pretty much whether I'm talking about cutout or live hog or dressed hogs. We're down about $20 a hundredweight or so. That's probably a little bit bigger than what I would say is seasonally normal, but it's it's not. I guess it's not as big a difference as we're seeing on the beef side. Trade definitely is part of it on the hog space. In reality, pork exports were not impacted as dramatically as beef was in 2025. I'd like to point that out. The drop in exports on the pork side, although significant, was not as big as it was on the beef side. And then, of course, we got to also recognize the link between these meat products, right? As we see pressure in the beef space, that's going to kind of also impact pork to some extent because they're substitutes. So I think those are the 3 big stories that I guess I've been telling about what we're seeing in the hog markets. And this really goes back in the hog space, really back to late summer.
On the cattle side of things, you mentioned beef exports being down. I think the big story there is China still has not reauthorized those 400 facilities, and it's processing. It's a mix of a lot of different facilities, which essentially eliminates beef trade to China wholeheartedly.
Yeah, sorry to interrupt you there, Megan. Sorry about that. Absolutely. What data is available now. I've been kind of scanning, and you look at China, and there's just nothing lately, and we're just simply not getting it. They had gone from being obviously not a market for us to a pretty small market for us to being our 3rd largest export destination in 2024. So when you think about pulling that out of the demand equation, it's significant. And, there was obviously some discussion with China, mostly related to soybeans in the last couple of months. I was optimistic that that might lead to some change on the beef front. I'm still going to be optimistic to some extent about it, but thus far, nothing.
When we look at that much of a disruption with everything else that's been happening, I would assume it's got to make it difficult for the future sector and now moving over into the cash side of things for there to be support in any attempt to push these prices back up, even though we're still at incredibly high price levels.
You said that well. It's hard. It's impossible, not to be frustrated about the last, 6 to 8 weeks. It just is. You're right. I mean, if I had told you we'd be at these price levels a year ago, I think everybody would have been relatively pleased. But it doesn't change what we've seen the last little bit. January feeder cattle futures are down over $60 a hundred for mid-October. Live cattle futures down, I think, about $33 a hundred from that same time period. Cash isn't off as much. I think we're down about $15 or so. I'm kind of looking at my notes here. Apologize. Down about $15 on the cash side for that 5 area average. So basis actually has improved, but it doesn't change the drop that we've seen in values. Cash feeders have also been hit harder, of course, than lives, and it just makes it tough to say. Everything about me wants to say that we've bottomed, and I can't justify why we're down as much as we are based on what's changed the last 7 weeks. I can't, but it doesn't mean that that's going to change things drastically. And if I'm honest about it, Megan, it's hard for me to justify. For example, I'll pick on my feeder cattle because I focus there most of the time. I can't justify why we've shaved over $60 off the January feeder cattle futures price since mid-October. But I also would have had a hard time telling you why I thought we went up that amount, from spring to fall, right? So I think you have to also recognize that probably this market had gotten a little hot. And now there's kind of been numerous factors that have been somewhat bearish that have kind of pulled us down pretty sharply. And that's just where we are. Sorry for the long answer again. It's story of my discussion, right? But I do kind of like to just step back and look at the fundamentals and say, that we've still got fairly tight cattle supplies, and that's true. And I still maintain that beef demand has been pretty strong. So I think those two things are definitely at play, and they do give me some cause for optimism, certainly as we think about going into 2026.
All right, so let's talk slaughter numbers as we take a look, both cattle and hogs. Where are we sitting weekly, and how's that running in comparison to year ago levels?
So cattle slaughter for the week was projected at 585,000 head. That's actually up about 9,000 head, or about 2% from last week. We're still running sharply lower on the cattle side. We're running steer slaughter somewhat lower. Steer slaughter down about 4.4%. Heifer slaughter, this is maybe worth noting, and I'll kind of maybe revisit this with the cattle on feed numbers, Megan, but heifer slaughter is down about 6.5%. But you look at that cow slaughter, and that divergence just has continued. And we're running about 18% below year ago levels on the cow side. So that is huge. Hog slaughter down 4% this week at 2.6 million head, and also running a little bit below year ago levels, but not to the extent that we're seeing on the cattle side.
Always, and I feel like these numbers are interesting to track just to kind of gauge where we've been year over year. So I appreciate you guys keeping this like spreadsheet, especially when we lost all of this data during the shutdown. So it gives good perspective, and it helps us kind of line things up to where we've been historically and how things are going.
And to USDA's credit, right, it did, although we didn't get the data for a while, a lot of that is becoming available, and you don't always know what to expect, to be honest, Megan, but there's not some gaps, at least in some of the data that we're looking at. So that makes it very, very nice in terms of trying to kind of pick up where we left off, if you will.
So let's talk cattle on feed numbers.
All right.
And we received November data. To USDA's credit, we also received October's data, which the big question was, would we get that sex breakdown of steers and heifers on feed, and we did, and I won't steal your thunder. I will let you talk about the numbers.
So yes and yes, we got October, November, and we got the gender data. So it was I don't know, it's been, we've talked a lot about the markets and tried to kind of align the fundamentals and talk through things, but I don't know that this is a major market mover in terms of deviation from expectation. And I think expectations, honestly, were, they were just different, not knowing I really did not know what we were going to get Friday, to be honest with you. I think I texted you and said, we actually got data for both months. But it's nice to have some tangible data to talk through. And I guess the story is, in all honesty, we were kind of picked up where we left off. In terms of placements and on feed numbers, I mean, they kind of align with where, things were the last time we got data. Let's just talk through them and then we can dig anywhere you want to dig a little deeper. So the way that I did this, I was trying to think the best way to kind of talk through it. We're going to talk about November 1 on feed estimates because that's our most recent point. But when I talk through placements and marketings, I'm actually going to pool the 2 months that we now have estimates for. So I'm actually going to pool September and October and compare those and compare those 2 months for 2025 to 2024. To me, that tells us the best story about the new information. So November 1 on-feed inventory was estimated 11.7 million head. That's 2.2% lower than November of last year. That's a bigger decrease from a year ago than the October 1 number did show, and I think that's worth pointing out. So, we're still seeing lower year-over-year on-feed inventory, and that makes perfect sense given the supply of feeders out there. Looking at the 2 months worth of placement, so simply totaling up placements for September and October, they're going to be down, obviously sharply, going to be down by about 362,000 head in 2025. So down about 8.2%. And again, we're still comparing to a year ago time period that preceded the ban on imports from Mexico. So that's a big reason for that. In terms of marketing, same exact thing. That 2 month period, September and October placements down 6% from 2024, a little over 200,000 or so. That's the on feed, the placement, and the marketing numbers.
Okay. Do you want to talk heifers first before we start asking questions?
Whatever works for you. So
let's throw the heifer data out also, and then we can just kind of get into some of these different pieces because I think it's going to also tell a pretty specific picture, doesn't it?
I think so. So, it's as of October 1. So it's important to understand that this gender breakdown, steer heifer breakdown, was based on October 1, not November 1. So although we're getting it in November, it's still kind of on cycle with that quarterly October 1. Heifers represented 38.1% of total on-feed inventory. That's essentially unchanged from July. I mean, I think it's like a 1 or 2/10% difference. If I compare October 1 of this year to October 1 of last year, it's actually a decrease of about 1.5%. So I guess my story really is largely what it was last time. It's not a number that screams a lot of retention, but the fact that we are down at point and a half from a year ago certainly matters, and I think it's something we're going to definitely watch going forward. When you think about, when a lot of our calves tend to be weaned, it tends to be fourth quarter. So I think that January 1 number may tell a better picture. But, we're still kind of in this upper 30% range, right? Which, you combine that with a few other data points, the big one being that January 1 heifer retention number. It still doesn't suggest a lot of heifer retention. I think we can say that we're probably seeing more than we were a year ago. I think that's safe at this point. I think anyway. But it's still not a number that screams retention. We would be, I think, at least in the mid 30s if that were the case.
Historically, mid 30s, low 30s, right, is where if we're showing growth, that's kind of where that percentage would be. Right?
You're correct. If you go back and look at that 14-15 time period, we were in the low 30s. Now, in all fairness, you've also got to consider that at the same time you think about cow culling. And we've talked about that quite a bit. That is a difference this year, right? The fact that beef cow slaughter is down more than 18% through the first 46 weeks of the year. I mean, that tells you a lot. So, we're going to see, I think, larger beef cow numbers in 2026, mostly due to reduced beef cow slaughter. But it also kind of suggests that we're not seeing widespread heifer retention, such that it says a great deal about the time period following that. In other words, if cow slaughter returned to more normal levels, I don't think this level of heifer retention speaks to continued growth in beef cow numbers at this point, and that can obviously change in the next several months.
Does the volatility in the last 6 weeks, it's a two-part question, right? Like, do we get prices to levels where it makes more sense to retain than it does to place and to sell? But also, does it make is it negated by concern about additional volatility and additional declines in profitability for producers? How do you, as a producer, how do you even navigate this at this point, looking at, like, where's the balance, right? Like, prices, we're not getting these record high prices. It doesn't make sense for me to sell them. Maybe this is the time where I retain, but this volatility and losing 60 to $70 in the last 6 weeks makes me nervous about adding more risk and holding back at this point.
You said it perfectly. The question kind of frames up like this: How does the last 6-7 weeks impact producer interest in expansion going forward? Right, and it just did not seem like there was a great deal of that anyway. On one hand, I can argue that that what we've seen makes me less likely to unload some of these heifer calves and keep them, but in reality, I don't think that's what we're going to see. I think this is somewhat anecdotal, Megan, but as I visit with producers and as I follow things as best as I can, based on what I read, it just seems like a lot of the optimism that was there has kind of left. And I hate to say that, but I think it's largely true. So to me, that actually speaks to even less desire to think about holding back heifer. So I think it actually may slow heifer retention even further. And again, I'm going to remind us about the time frame here. So that heifer share number was based on October 1, right? Which would have been before any of this. So anything that we've talked about, I guess, relative to heifer retention in the last few weeks, we don't really have data to support or talk about at this point. We might come January.
I feel like we're just in it definitely feels like there's been air sucked out of the room. As I talk to cattle producers, sale barns, any element of that, and there's definitely been a shift in tone. And I think, is that, as an economist, right? Like, we talk about not making emotional decisions, but when the mentality shifts, or if there is a mentality and a feeling, or as young kids would say, a vibe shift, does that come into play when you think about, does it override fundamentals? Does it override some of those, like, unemotional, non-emotional decisions for your operations?
The answer is yes. We can talk about, trying to focus on fundamentals and talk about being objective and talk about, not making emotional decisions. But that's just not people's being. Let's be honest, right? Their feelings about, the future, and this is especially true when we think about expansion decisions. That's a long-term decision, right? So the level of optimism someone has about the next several years absolutely impacts their interest in heifer retention. So I think we're naive to think that's not the case. And I do think that's probably what we're going to see, especially if this continues, if prices don't see a pretty significant rally, as we move towards spring.
So let's talk about this in terms of the other news that happened this week. Tyson announced it's shuttering its Lexington, Nebraska facility, so 5,000 head a day capacity. At face value, I think I saw the headline yesterday and said words that I cannot say here. It, and I think as you look at it, there's more to that story. But when we're shuttering capacity and losing shackle space, what does that do for the industry in general and thinking about where we go, direction, price, elements within the market?
Sure. Well, I guess I would just kind of say that the hits just keep coming, and that's just where we are. It seems like it's been one thing after another the last 6 or 7 weeks. Mid-October, this market seemed like it was setting new highs every week and shrugging off anything potentially bearish. And it seems like it's latched on to anything potentially bearish since then. To your question specifically, there's no way to positively spin the loss of a packing plant, certainly not one of that size. Now, I read, I'm sure the same thing that you did. That doesn't necessarily mean that we're going to see that big a drop in slaughter. They reference, increasing capacity, or sorry, in increasing slaughter in other facilities and things like that. And I'm sure some of that'll occur. But the work is pretty clear on this, and fairly recently, 2021 or 2022, Glenn Tonser and Lee Schultz had published something that looked at this very thing. It was kind of coming out of COVID, ironically, but just looked at the impact of capacity or shackle space, as you said, on prices. And the impact is clear. As you lose this capacity, as you lose that shackle space, it negatively impacts fed cattle price, and there's no other way to spin that. And that will trickle its way down through the system. What's also a little bit hard to say is how much of this is kind of already priced into what we've seen, and that's I think a bigger that's more likely in the feeder cattle values than it is in the fed cattle values. But as I think about all of these negatives that we've kind of been working our way through, it goes back to kind of the broad statement about lowering beef prices on October 16th, and then there's discussion, obviously, of Argentinian imports, Brazilian imports, imports of live cattle from Mexico, and now this plant closing. It almost seems to me like we've already priced it all in. And I know I may not be right about that, but it's almost like it's priced in already. And some of these more recent drops, though, we're okay. We're responding to some more concrete news on that. I thought it was already in there. So, we're back to this emotional discussion, but the markets are obviously reacting to a plethora of bearish factors here. And unfortunately, this plant closure is just the most recent, I think.
And I didn't even bring up last week after I think Charlie and I talked, the president had announced he was removing the 10% tariff. This week, he announced he's removing the 40% tariff in addition from Brazil. So, I mean, how does I don't want to talk about all bad things this week, but is there a concern that, that's another negative impact on what happens in prices?
Sure. So, with respect to the Brazilian discussion, that had been out there for a while. In fact, back in mid to late October, there was discussion. Okay, how much of this is pricing in the probability or the possibility of lowering or eliminating those tariffs on Brazilian imports? So, I would argue some of that was priced in already, although we responded negatively, of course, to it. Brazil's a major beef producer. They were on track to be our largest source of imports early in 2025. So I think we'd be naive to think that we won't see sharply higher levels of imports from Brazil going forward. It is mostly trim, and I think it's important to understand that what that means is a lot of that will be used for blending. We haven't talked about this directly on this this particular episode, Meghan, but slaughter weights are up another 20+% dress basis. The percent prime, the most recent data I've got was north of 13%. So I'm saying all that to say there's a lot of need for lean trim right now. And we had been getting a lot of that from our cull cow markets. I think we'll probably start getting more of that from Brazil. So I do think there's some impact. I do think, though, it's mostly on the trim and burger markets, and I think it'll spill over into the cull cow markets. That would be my guess for what the biggest impact will be. But there is certainly, I think, an impact to watch.
Kenny, anything else you want to touch on this week?
Man, I feel like we covered so many things. Well, I'll stop by saying this. I mean, it's been a challenging 6-7 weeks. It has, but cattle numbers are still low, and I'm optimistic that demand has stayed pretty strong. So I don't want to lose sight of the fact that it's still a fundamentally strong market. It's just been one thing after another on the negative side here the last few weeks. Let's leave on a semi-positive note. How's that?
And have risk management conversations. If you haven't already been having them, make sure you're doing that regularly. I feel like it's probably a good time too, and I don't want to keep you too much longer, but to like self-evaluate, right? Like look at your operation. How do these dynamic shifts in the market impact how you're planning into 2026 and beyond?
It's a teachable moment from a risk perspective. And I think it's also, like you said, it's a good time to reevaluate everything. And, for example, we were talking about, that expansion decision, heifer retention decision, right? It's a good time, right, to kind of step back and think, okay, where do I want to be in the next 2 to 5 years? And, that means a lot of things, but that means the number of cows that I'm going to run. It means kind of where I'm going to focus my efforts. And I think it also includes risk management plans.
Kenny, it's great to see you.
You too, Megan. Thank you.
We will take a break next week for the Thanksgiving holiday, so we will be back in the first week of December. To our weekly livestock market update delivered to your email box on Saturdays, go to brownfieldagnews.com. You can also submit questions and comments if you have those. If you're watching on YouTube or any of our social channels, make sure if you have questions for the economist, leave feedback. Let us know. We will get those questions answered for you. And for market updates twice daily, make sure to check out Brownfield's Market Minute with John Perkins. Have a great weekend. I'm Meghan Grebner for Brownfield.